Good morning, everyone. This is Dan Cook. I am not Todd Rich. Todd is taking some much overdue time off. I'm here with Brian Caprice, and we're going to be talking about the morning market movers, which we've got some substantial moves. Going to hit on crude, gold, the indices, a little bit about currencies. So, real quick, though, before we get started, I'm going to give you a real quick disclosure here, if I can find it. Little technical difficulty, so here we go. You got to understand trading involves risk. We've seen some big moves, obviously, in the markets. Only ever trade with risk capital, not grocery money, not your mortgage. It's the surest way to lose. You got to make your own trading decisions. We're here to provide education and talk about the markets. We're not here to give you buy or sell signals. We're going to be talking about some key levels, but you should do your own research, put the work in, and understand the risk you're taking. Most important part of trading is understanding that risk. And with that, Brian, I'm going to turn it over to you to kick us off.
Sure. There we go. All right, so let's just do our kind of normal kind of layout for the day. So in the last 24 hours, when we're looking at pip changes across the world, the only thing we're really seeing a lot of movement in is kind of a more or less a retrace of what we saw last week. We're seeing the euro dollar up 100 pips again above the daily ATR. We're actually seeing the pound dollar up as well. You may say, is this European strength, dollar weakness? The reality is, if you look at some of the dollar-based pairs, dollar yen 10 pips in 24 hours, nothing. Dollar Swiss -2, nothing. Dollar CAD 5, basically nothing. Aussie dollar 48, so again a little bit of dollar weakness there. But looking at the euro pound, we can see it's up 43 again. So again, showing this continued strength in the euro. The pound yen is up as well, but overall, when we're looking head to head, the two strong giants out there, it is 44 pips. So we are again seeing European strength in there. Reason why, again, it was also very, very beat up over the last week, 2 weeks with all the whole Ukrainian and Russian situation. The last 2 days have been actually rather tame, so we haven't seen really any headlines. Because of it, we're hearing, things are stalled. The European nations are like, we are no longer concerned about, the military strength of Russia. They've proven that they can't, beat locals. So a lot of kind of the fear is starting to evaporate out of the market. This morning, just a little while ago, 3 minutes ago, actually, we saw the German chancellor basically said that, yeah, we're absolutely not sending warplanes to the Ukraine. They're kind of really not needed. Justin Trudeau actually did say that they're going to send more specialized equipment. When they say specialized equipment, what they're talking about is basically the missiles. The missiles are kind of helping them stall, win, whatever you want to say. And that's it. There's nothing else. So with that being said, that is absolutely helping the European currency right now. So we're seeing it, is there buying opportunities or selling opportunities? I wouldn't say not quite yet, because again, I told Dan a little while ago, it's strained with everything going on. We were so bombarded for weeks. We see absolutely nothing right now in kind of these hottest stories. I mean, Russia, a few, their agencies got hacked. That's it. Nothing else. So I always get scared when it's quiet is when all of a sudden somebody drops a pebble into the pond. So there's no way to predict that. So what we can look at is kind of what our news is this morning. First thing, obviously the hot topic right now. It's not actually inflation, which is nice, but it's crude. It's oil. It's the price of oil. So as you guys know, we get a report the night before oil comes out. Now the crude oil inventories today is at 10:30. It's supposed to be minus 1.1 million as a down draw. Here's the API number. The API down draw forecast was a little bit less, and once again, we came in at a surplus, okay? Meaning we have extra sitting in inventory, 2.8 million barrels. Kind of a big amount, right? All the talk about, we're going to block Russian imports. We were talking about 90,000 barrels. We were talking less than 3% of the oil we use in a day, okay? We're sitting at the same time, if you think about it, 90 a day times that by 3, 2.8 million above what inventories were expected. So we actually have extra, all right? Because of that, oil is down $6.88, okay, already from where it closed. Yesterday, we were talking about potential reversals. We talked about 10:30 being a common time, very popular time, and it did. It hit 10:30, it dropped, it came all the way back, and it's continued to deteriorate all the way back down to 117. Now, it is a very interesting level, 117.55. There's nothing special about that, but just a little bit farther below that, we do have the gap from where we closed last week on Friday, and that was around approximately 115 or 116, right around that level. We did hit that on the 7th, 2 days ago, right, on Monday, and that was an area of buyers. With news coming out in the next 3 hours, everybody's going to look at the API report and say, "Hey, we got a big surplus there." A couple other people. Where is he? IEA, basically, where is it? Here it is. Burrell says, hey, we can produce more if you want. If we're required, we can make more, right? So these are all signs that, listen, there can be more oil coming in. These are all kind of negative for oil price. Biden said, don't, expect gas prices are definitely going higher. And a lot of people said, how high can it go? 150, right? We know right now, seeing gas prices what they are, a lot of people are remembering back right now to 2008 and saying, well, these are all-time highs. Actually, they're not. Okay. If you take inflation into account, we actually don't hit all-time highs until price gets up to $5.25. So we actually have a lot more room. It's not as bad as it's been. So again, it's not as bad as it was. It's actually, the truth of the matter is, yes, we cut off oil. It's less than 3% of what we use. Now the API report, which again is the industry specific report, is saying, hey, we got a huge surplus here, right? We're expecting a downdraw of 1 million. Now we got, positive, 2.8. That's a swing of almost 4 million barrels of what we didn't think we had. So there's that. With it driving down though, again, the market is factoring that in. I'm kind of, wondering, hey, listen, if we can get down to here at 10:30, if there's not a big spike up in price when the retail trader gets in, are we in a long type scenario? And we could be, right? If you want to buy something, everybody knows you buy it when it's on sale, not when it's at its highest price ever. With it kicking down in the overnight, the Europeans really started this kind of trend today. Here's where the European Open happened. The Europeans have done nothing but drive price down. The question is, do they know something, right? Are they driving the price down artificially so we can get a nice pop up? That tends to be kind of where we see these things when we have one. And again, I haven't drawn them for a while, but when we talk about European session, this is what it's looked like to 8:30. And again, typically we would use blue for this. Okay. Seeing blue straight down, again, we've talked about this pattern where we tend to get V's, right? If the European session is straight down, the US session tends to fight back, right? Because we're the oil, we're the oil consumer for the most part. Question is, do we come all the way down? Do we get down to here for 10:30? And does that become our next little pop forward? Do I have a crystal ball? No, but I do know this is a pattern we've seen many times where we have one direction and then another direction. And again, 10:30 is not only a reversal like we saw yesterday, it is also where oil inventory is coming in. And the market right now, the forecast is that we're going to be down 1.1 million barrels. Yet the API forecast was we actually have 2.8 surplus. So it's kind of setting up on a fundamental process. And remember, those are not the same numbers. They are different. But again, it's not like they're very accurate. The forecast, as you can see here, if we go back, I think once last year? Let's see. There's one in 2021. There's two. Three. They were right 3 times last year. So, and it comes out every single week. So with that said, am I expecting this 1.1 to kind of nail it on the button? No, probably not. And right now, the only thing we have is an industry-specific report that says we're higher. And again, the industry saying, hey, we got extra surplus. The industry makes money from this. So, not always the best thing to show that we have a surplus there because this is the result is it coming down. So again, keep that on your radar for potential trades today. Another commodity I want to talk about is gold. Todd and I mentioned yesterday, is this probably the top? It really depends on the Fed and the CPI number tomorrow. But we said, one of the things I was saying was look to figure out how to get short gold, right? Gold is a great hedge for inflation. It's not a great for crushing inflation to try to stop inflation. That, with it popping up, again, all the commodities are rising. And what the Fed has said thus far is well, maybe we'll do 0.25 because, Ukraine. Well, there's no Ukraine headlines. The Ukraine story is starting to evaporate. It's kind of been halted. We're not seeing much. Okay. We do know that, right now the expectation for tomorrow for CPI is that it's going to increase. It's not slowing down. It's not staying the same. It's actually accelerating. And now, again, with, gold the way that we, with oil the way we've seen it, this has been the big thing. In a week, it's gone up over $20. It's gone like a $30 raise. So inflation is one of those things that it's definitely going to come back into play. And because we're in the crushing phase again, gold is just getting hammered. And we went from, yesterday at 10 o'clock, 10:30. Yeah, actually, this is 10:30, right? 10:30 candle is right there. You can see that was kind of the high of the day. And then we reversed back down. And that was up at 2070, and now we're down at 1984. So put a horizontal line here so you guys can see it. 2070 or 1970 is right there. That's a $100 drop in one day. So this is why, again, we're not buying after large pushes up in price. We're looking for kind of stalls and reverses, and we did get one. And again, the Europeans have pushed it right down. Do they know something? Maybe, but the reality is crushing a high interest rate environment is not really kind of where gold is. And again, remember, we did get a headline a little while ago. Biden has now officially sign an executive order that, hey, this crypto thing is real. We actually have to do something with digital assets. So they didn't announce anything. There's no regulations. Basically, he told the agencies, hey, you should start putting some policy recommendations in there. And what they're looking for is a focus on consumer protection, financial stability, illicit finance, which has been the big problem with it, and then promoting U.S. leadership, financial inclusion, and responsible innovation. And again, those are kind of like all the asterisks at the bottom. But again, it is the first step. Again, I do think he's a little bit late. I don't think the U.S. is leading. We are actually, lagging. China actually has a full policy in place already. So, but it has been good, and because of that, again, some of the traditional assets of gold, it tends to be the rich way to invest in the markets. You're seeing cryptos up about 7-8%, right? This is the spike. Now, with these spikes, you tend to have reversals. So again, it's above 40, huge spike up. But again, a lot of the money that's coming out of traditional assets like gold has been put across into cryptos. Remember, them talking about digital assets, they're also talking about things like the digital dollar. And one of the big linchpins for cryptos in general is going to be the illicit finance. Russia has made comments that, hey, listen, if you're going to block us off from the traditional banking system, we'll just use cryptos. We'll produce more, Bitcoin here than anybody. We will welcome all the miners in the world. Not really what you want with kind of that scenario. So gold is also a big one. Again, that is down $62 technically since the close. It's down almost 100 right now. You guys can see how close we are, but it's down 3% before we even started the market. Silver obviously is following. Silver yesterday, we also talked about the top. We're just breaking through that 50%. And again, I think silver comes back down to 25.40. VIX wise, obviously our headlines are not flooded with pictures of missiles, tanks, nuclear threats. We're not seeing that. That obviously lowers the volatility in the market. VIX is down 7.4%. That's a big jump in one day. And yesterday was a little wild. We got that immediate spike, and then it just absolutely collapsed, and that helped the market rally. All the indices across the board right now are green, as they should be, obviously, with the VIX and the lack of major headlines. Now, the interesting thing about all the indices, as you can see, yesterday got wild. We did use the 50%. This is the ES. Let me drop it down to the 15-minute. I think it's very important to note, like right now, where we're seeing this kind of rally, there's really no economic headlines today, right? There's the JOLTS thing, and some people look at the JOLTS, but it's not typically that big of a deal. There's crude oil, and that's kind of the big spotlight right now. That's it. We got no more speeches, nothing else. Tomorrow with CPI, though, it's expected to show us that we're having increased inflation. It's not only broadening, it's getting worse. The CPI core, they're showing that it's still a positive number, although it's a little bit less than it was last time. But remember, last time, they keep saying that it's going to go lower, and it keeps actually coming in higher. And again, look at the CPI numbers. They were forecasting last time 0.4, it came in at 0.6. Now they're jumping the forecast to 0.8. If they follow the trend where they keep saying, look, it's not that bad, guys, it's not that bad, and it comes in higher, is this going to be a 1%, 1.1%? Could be pretty crazy. And again, what that would do is lead us into an indices short tomorrow. So this is, again, let me actually bring this to the 30 just so it's a little easier to see. If we take the recent high to low, we're talking about 50% retracement levels as being big areas. Now, yesterday at about 1 o'clock in the afternoon, we had that big rally up, and we talked about, hey, big rallies lead to reversals. It came in, and unfortunately for the fib traders out there, the algo programs, it did not actually hit the 50% retracement. We had talked about having an area right below that. I'm going to drop to the 50. Excuse me, so you can kind of see where it was. You can see we had an area of sellers nestled right below, again, this black line is that 50% retracement level. Again, fib traders, they didn't get an entry, and unfortunately, they missed out on this big rally to the downside. Again, this is why I use it as a confirmation tool, a way to locate good supply and demand. Dropped. We are approaching that level again. So we are coming back up to that 42.63. A lot of people will see this and say, hey, listen, we're up 1.7%. This is great. We're above our Globex highs. It's time to go long. On a technical basis, again, we're sitting there at a 50% retracement where automated machines are going to get in there and start selling it. It's already been front run one time off of that level. Could be a hotbed. We may be looking for some type of a rollover. There's a number of different reasons. We may stabilize and we may push back again, but it's something we got to keep on our radar for today as well as CPI for tomorrow. So just kind of keep it on your radar. I do think, again, if we can break through this because, retail traders saying, hey, listen, we're up 1.7%, got to go long. If it does breach through, I think 43.24, again, it's a tested level. It was the gap from last week. That could be another level where we see profit taking today, especially if we jump through. That would be like a 140-point move in ES. It's absolutely beyond kind of what it should do in one day. there could be a reversal though. And again, if today is up, if we decide that we're going to break through this 50, so a level that we can use for CPI tomorrow. NQ also at a similar level. Again, we take the recent high to the low. It's not the peak. It's kind of the last major drop that we went down. We saw that we got a little spike through that hidden level. We talked about it, saying, hey, listen, if we can get through, watch it. You know, the 50 guys are going to be using the 61.8 as the stop loss. But there's a supply zone sitting right there. It did. It pushed through and then triggered it down. It stopped all those guys out. We're back in the same area. We're floating around the 61.8. You can see the old level that we talked about, that old Harry Potter level. We're stuck there again. Also kind of looking at this saying, is there going to be some profit taking here? It's a kind of an interesting layout. And again, if we start to rally through, we know the 13,650. We got a racetrack trade all the way up to 13,873. Just like in ES, if we do push up to there, again, when news comes in tomorrow, which would be, let's see where we at. That would be sitting right. And it looks long because there's a 15-minute chart. If price is able to go from here and we do push through to here, that is also setting us up for an increased CPI. Again, it misses most times to the top side. If it comes in at a 1.3, that is a big reason why they would have to do a 0.5 increase in the interest rate instead of a 0.25. That should lead to a pullback in the market too. So that is also setting up. YM, basically the same thing. We're sitting right at the 50 now. Yesterday, we marked off all the sellers over here that were hiding right above the 50%. You can see that we came up. If I draw a horizontal line right off the top, right there, there's the top of that wick. Look at that. Magically, that's the exact same that it hit. Exact spot, went back down, and we are also pushing back up to the 50. There's a level up here, the 35,512. Again, last week's gap, tested, confirmed. If we push up in time for tomorrow, over here, again, could also be a shorting opportunity. Russell also has a similar thing. We talked about kind of the sellers up in this level. Again, they didn't even make it all the way up there yesterday, but there's another level here, as well as we have another level. If we get a major rally today, we do have another level sitting up top, again, in regards to CPI tomorrow. So CPI is definitely a big one. Again, the name of the game today is going to be look at the statement in oil. It's expected to be down. The API report is showing that we have quite a large amount sitting there as surplus. Again, that's not great for oil traders out there. And then CPI is an absolutely huge thing that we're looking at. 0.8, again, is they miss low. So if this one comes over 1%, that's going to be a major thing that Powell has to answer to. And then also don't forget, 7:45 tomorrow, we do have the monetary financing rate and the monetary policy statement from the EU, right? The Europeans are not raising rates because of the Ukraine, but if they say it continues to subside, if they tell us they're going to raise interest rates next time, off to the races, a lot more strength. So right now, this is kind of set up more for a weakness. Strong euro today could lead to a big short tomorrow at 7:45 a.m. So that's all I got for today, Dan.
Awesome. Thank you very much, Brian. A lot of market movers, and yeah, CPI number tomorrow could be huge. Could be a great turning point in the market. So really appreciate it, and look forward to seeing everybody tomorrow. Thanks, Brian.